All right, what's going on, everyone? I want to go into a trade recap. So we're going to be recapping the price action from the 26th. So this is this Wednesday. Man, we just had a beautiful sell-off, and it was a very technical sell-off. So I want to go over the price action and kind of how I managed my trades going into today, because if we want to talk about my key components on what makes a good trading setup, today it just gave us everything we needed. And we had a great day. All I did was take shorts. So the draw on liquidity was the new week opening gap. We're going to get into that. But just to show my executions right here, I mean, all I did was short. We had one loss and 5 wins. Well, really, we had one loss and 4 wins because this was just this was one micro that I ended up taking off a little bit late. So 4 trades total in reality and 1 loss for $95. And the rest is, as you can see, my wins are much larger than my losses. Now, getting into this price action, it just was so beautiful today. So number one, I want to talk about the draw on liquidity, which again is this new week opening gap, or it was this new week opening gap. It has now been filled. So new week opening gap, if you're not aware of what it is the gap up on a Sunday night. So we don't always have a new week opening gap. More times than not, the market opens exactly where it closed on Friday evening, but sometimes we get this inefficiency. So this inefficiency is an imbalance, right? And what does the market like to do? It likes to fill inefficiencies and fill imbalances. So we can use this as a draw on liquidity. But just because we have this gap here and just because we have a clear draw on liquidity does not mean that we can immediately start shorting down to that level, right? We need to have some higher time frame confirmations to actually paint the picture on why we're going to begin shorting. We have the target, but now we need confirmations that the price action is going to start developing in that way, right? For example, if we go to the 1 hour, we knew what the draw on liquidity was, but if you look at Monday's price action, if you were trying to short down to this level just simply off the new week opening gap, you would have got wrecked, right? All we did was chop around all day until we eventually just slam higher. Like, you would not have had a good time trying to short this. And I was not shorting on this day. I had no interest in it because we had no confirmation to start looking for the shorts. Now, today was very different. And the key reason why today was different is because of this bearish SMT divergence that we had put in. So if you look right here, NASDAQ makes a higher high, right? So this is the candle that I want your eyes to go to right here. So this is Friday afternoon's 1400 hours candle right here. As you see, NQ takes out this high, right? So it sweeps this liquidity. Now, if we go to the ES, same candle, Friday, 1400 hours right here. ES does not sweep out this high. So SMT divergence is a price action pattern. It is a divergence between the NQ and the ES in the price action. So ES makes a lower high right here. While if we go back to NQ, NQ makes a higher high. Now, SMT divergence is one of the most powerful reversal signals that you can use. It is similar to RSI divergence, which I'm sure a lot of people know what that is. The thing about SMT divergence is the price action is so much higher probability to pay attention to. I'm sure if you're someone that has looked at RSI divergence, you can see that just build and build and build and build, sometimes over days. The cool thing about SMT and price action divergence is that it is a much more immediate reversal signal, which is really what we're looking for when we're trying to frame out a reversal. Just because something is building and building, it's hard to get a confirmation off that. We just know that maybe this is beginning to get ready to sell off. Whereas price action divergence, it is a lot more immediate. So that's number one in terms of the confirmations for the shorts. But our first major confluence was the new week opening gap. So how do we like to frame directional biases. We need two things at least. We need a draw on liquidity, which is incredibly important, but we can't just have a draw on liquidity. We also need a reversal signal. So for me, my favorite reversal signal is SMT divergence, just like this. So now we have the two main components to start framing out this idea. So if we go to the lower time frames now, we're going to put our kill zone indicator up. So the blue box is the Asia session, green is the London session, and obviously this gray box was our New York session. Now, when I woke up and looked at the charts, I saw that SMT divergence put in, and all I wanted to do was look for shorts from the minute of the open. That was my only focus. And again, if I go back to the trades that I took today, as you can see, all we did was go short. We didn't take a single long because for me, with those two main confluences, they're just too powerful to want to look for anything else. Now, there is two other things that we could be looking at to really begin to frame out this idea as A++, because this was an A+ draw on liquidity, and the probabilities of us reversing were just so high. And there was one other reason for this. Now, again, we're going to be using SMT divergence, but this time on the lower time frames. So right here, this is yesterday's New York session high on Tuesday, 11 a.m. So this candle, NQ makes a higher high, right? So going into the Asia session, the overnight session, we make a higher high on the NASDAQ. If we go to that same bit of price action on the ES, what do we do right here? This is our New York session high, 11 a.m. ES cannot take out that high in the overnight session. So once again, we have bearish SMT divergence. So now we have it on the higher time frame, on the 4-hour, and we have it on the 15-minute. So those two things alone, I knew I want to look for shorts. On top of that, if we go to the NASDAQ, because I was trading the NQ, one other very simple price action pattern that we're paying attention to, you see right here, what is the market doing here? Higher high, higher low, higher high, higher low, higher high, higher low, higher high. What do we do here? Lower low. What is this? Market structure shift. So now we have everything we need. We have everything we need. We have SMT divergence on the higher time frames, on the lower time frames. We have a market structure shift on a 15-minute time frame showing that we cannot maintain bullish structure from that perspective. And on top of that, we have the new week opening gap as our overall draw on liquidity. Now, when we get into my trades, let's get into the trades now that I took. I have them all marked up as clean as possible right here. Now, my first trade is honestly kind of funny because if I just held this initial short and just held it to the new week opening gap, man, would I have made a lot more money. But this is what's important, guys. It's not always about, like, you don't need to hold your trade to the entire target just because you have a clear target, all right? For me, I much prefer getting in and out of the market, finding my spots that are high probability on the lower time frames, and, you know, catching my base hit 1R, 2R, usually no more than 2R, and just trading towards that draw on liquidity, right? I knew that if my bias is going to be correct and we're ultimately trading to this new week opening gap, I'm going to have a ton of opportunities for high probability shorts. The other thing about it is that I don't actually know before we have the gift of hindsight, I don't actually know that we are going to trade all the way to the new week opening gap today. To be honest, I didn't think it was going to happen all in one day. I had a feeling we'd probably get halfway there, maybe 3/4 of the way there today. And then ultimately we'd maybe save it for Thursday, but we didn't. Market, it knew what it wanted to do today. We wanted to fill this new week opening gap today. So I'm fine with that, right? I could take my base hits and you'll see I get in here, short, market drops. I wait for another high probability setup, market drops, and then we take one more right here. Now, let's go over the first setup real quick. Number one, we retrace above midnight in the 9 a.m. session. So we've already retraced midnight. This is a premium of the daily range, and we immediately sell off. So again, all I want to do is look for shorts today. It's all I'm interested in. So what do my eyes go to on the 5-minute time frame? Very simply, right before the open, we create a bearish fair value gap right here. And this was my first trade. I mean, just super simple analysis. I have the context that we have higher time frame SMT divergence, lower time frame SMT divergence. We've shifted market structure on the 15-minute and the 5-minute. So even from that perspective, shorts are going to be easier for the time being until we sweep some liquidity. Shorts were easy. We haven't swept any liquidity here. There's no reason for me to think we're going to reverse here. Now, when we got to here and here, if we pulled back and then shifted market structure again, it would maybe be harder to short. And I would think it's possible we sweep out these lows and we're going to move higher. But obviously, we didn't even get a chance to think about that. But until that happened, shorts are easy. This is the way to go. So I had a limit order set inside this 5-minute fair value gap. And pretty quick delivery. It wasn't perfect. My entry was right here on this candle at 460 on the NQ. Pops a little higher for a moment, digs a little deeper into that fair value gap, but I had clear invalidation, right? I just don't want to see that fair value gap get ran through. As long as that happens, my stop is in a safe enough place that if I'm right on this trade, I'm not going to get tagged out here. So we get a 1-to-1. I think that first trade we made like $350, something like that. Nice little 1-to-1, padding the account. Again, I know I want to look for more shorts. Like all I'm doing is looking for shorts today. So I will have another opportunity. Now, this was pretty hard to sit out when we were just selling off here. I did have a little bit of FOMO, not going to lie. I mean, I wanted to look for more shorts, but we just did not have a proper enough pullback for me to see anything as high probability here. So I had to sit out. Now, as we come into the 11 a.m. session, and this trade I took on stream on ASFX TV. So the community took this trade with me. We called it out live and kind of went over it in real time. But what we were looking at, market sells off. We start to consolidate and get a minor pullback. Now, what are probably a lot of people thinking right here? They're probably seeing this as a market structure shift, right? They're thinking, okay, market had a bounce, put in a higher low, higher high. They're seeing that as a shift in structure. I'm not, right? Because what do I constitute as a market structure shift? Market structure shift has to happen. It only happens when we take out the previous lower high that made a lower low. Okay, so all of this in here is substructure. It's not the external structure. Now, if we took out this high and continued to displace higher, because this is the last lower high that made the last lower low, that would be a valid market structure shift to me, but that didn't happen. All right. As long as we didn't take out this high, I'm sticking to the short bias. And again, looking for my shorts to new week opening gap. On top of that, so we have the idea that there are probably people getting long here. I mean, this looked a little bullish if you were very zoomed in. But then what happens here? Market just has like a brutal consolidation. And as the market consolidates like this, we put in another bearish SMT divergence on the ES and the NQ. So what do we do then? Notice where my trade is. It's not up here. It's not in the middle of this chop because there's no confirmation yet. Just because I have a bias does not mean that I'm just going to get short in here without any kind of confirmation. So what was my confirmation? It was almost identical to the last trade. Once again, we put in that SMT divergence. We don't shift any kind of market structure, and we create a 5-minute fair value gap right here. So once again, I have a limit order inside that 5-minute fair value gap. After we displaced lower, we retest. My limit order is right here at the beginning of the fair value gap, and this trade was just beautiful. I mean, pretty much immediate delivery, no drawdown whatsoever. And we had another thing to look at. So I was telling the team, if we bounce inside this little 1-minute gap, we might be wrong on this trade. What we want to see is an inversion. We want to see a 1-minute closure beneath the gap and retest. And again, it's exactly what we got. We got our 1-minute closure right here, move lower, retest it, and bam. And this one we caught 1.6 R. So a little bit more than 1 R, a little bit more than a base hit, but still, in and out. I don't need to hold the trade forever. And once again, we sell off. But it is what it is. I don't need to feel that FOMO. I'm just catching my wins where I see a good trade that I don't have to sit in for hours and hours. Now, the last trade of the day. I thought it was going to be done, but this setup just ended up being really clean, and it just became obvious. Again, where were we trading to all day? The new week opening gap right here. This was the draw. Now, I really thought that after we got this sell-off that we might consolidate, chop around, and then bounce, and then save looking for the gap until tomorrow. But once we got this close to the gap, that was the confirmation for me. We literally came within, 20 points from the new week opening gap on the NASDAQ, and then we start getting this bounce. It just became obvious. It was like, all right, we're coming for the gap. We're not going to go 20 points away from it and then leave the gap unfilled. I mean, anything's possible. It could have happened, but probably pretty rare. So this is our PM session. So 1 p.m. right here. We're in the 1 p.m. kill zone. And again, the setup is almost identical. I don't think there was any bearish SMT over here, but I was just looking at this 5-minute fair value gap. We're on the 1 minute right now, so you can't see it, but there is a 5-minute fair value gap in here. And as we've started closing beneath it, I just got short again. Again, 25-point stop loss, and we targeted 1.5 R. Again, could I have held it to the gap? Yeah, sure. But I'm happy to take 1.5 R, especially late in the day when I've already just been bagging wins over and over. Like, it's just more profit on the day. I don't need to squeeze out that last bit. I'm happy with this. I'm totally content with a 1.5 R. And those are the trades. I mean, and that was pretty much the last move. And again, look how powerful these levels are. As soon as we tap into that new week opening gap, this is at 3 p.m. What do we do for power hour? We're not going lower. We're done. We met our bearish objective, and now we bounce. Now the market is opened, and we are going a little bit deeper into the gap, and look, we're bouncing out of it. I would not be surprised going into tomorrow if we actually get a decent bounce, but we'll save that for tomorrow. We'll take it hour by hour. We'll play level to level, and we'll see what happens. But that's my recap for the day. Again, I wanted to go over today because the technicals were just so clean, and it gave everything that I need to see for A+ setup. So I thought it would be a good case study. Let me know what you think. Let me know if you're using SMT Divergence or fair value gaps. I want to hear how you managed today and if you also took similar trades. So that's it for today, guys. Peace.